Today, I woke up bright and early to the birds chirping and somehow pianos playing so peacefully. I watched the scenery outside, forgetting my nightmare the night before. With the harmony start of my day, I got the courage to answer my emails. So I opened my laptop too. Then I closed my laptop and proceed with my day. The time goes so fast, I started to feel a bit hungry, so I started getting ready to buy lunch. So I opened my drawer and so this question will never leave me alone. I guess I'll answer the first question. What is public revenue and why is it important? Public revenue basically means the income that government earns from various sources. Sometimes we call it public income. This includes money from taxes, fees, fines, grants, resource rights, or even from selling government assets. It's very important because this revenue is what allows the government to function. It used to fund public services like education, healthcare, and infrastructure. Without enough public revenue, the government wouldn't be able to meet people's needs or keep the economy stable. Now that we understand what public revenue is, I will get ready and go buy my lunch. Now I have finished getting ready and I got out from my desk to say goodbye to my minions. Oh my god, now you're asking me a question? Fine. I'll answer the second question. There are four main sources of public revenue. First one, tax revenue. This is money collected through compulsory payments made by individuals and businesses. Examples include income tax, sales tax, and corporate tax. The second one is non-tax revenue. This comes from other sources like fees, fines, or profits from government-owned companies. For example, license fees, court fines, or dividends from Petronas. The third one is fines. These are penalties charged when people or businesses break the law. For instance, traffic fines or penalty for environmental damage. And finally, intergovernmental transfers. This refers to funds given from one level of government to another, or even from international organizations. And an example would be the federal grants to states' governments or financial aids from the World Bank. Now that I finally answered my minions question, I'm finally putting on my shoes and out of my room full of questions. What a nice day to go out. Look at the scenery. Oh my. Now Mother Nature have a question? Fine. So basically, tax revenues is the main and most important source of income for the government. People are required by law to pay taxes and they don't get to demand specific benefits in return. Taxes also help reduce inequality because those who earn more usually pay more. For example, in Malaysia's federal budget, tax revenue include income tax, corporate tax, and service tax collected by LHDN. Non-tax revenue, on the other hand, comes from other government activities such as license fees, fines, dividends from government-linked companies like Petronas and Khazanah Nasional, or even government loans or grants. So in short, tax revenue is collected through compulsory payments, while non-tax revenue is earned through government activities. Both are equally important for Malaysia's growth and financial stability. Now we know what the difference is. I never feel so glad I can go down the stairs. I hope the tutorial question won't bother me anymore. Look at those trees, getting enough sun for all of us. Oh my god. Even trees remind me about those tutorial questions. Basically, direct taxes are taxes that you pay straight to the government. They cannot be passed on to someone else. These are usually based on your income or wealth and they considered progressive, meaning higher income people pay more. Examples in Malaysia include income tax, corporate tax, and real property gain tax or RPGT. Indirect taxes, on the other hand, are charged on goods and services. They are included in the price of the product, so even though businesses collect them, the final burdens falls on consumers. For example, sales and service tax (SST), customs duties, and excise duties. In Malaysia, indirect taxes are actually more significant because everyone pays them, even when buying basic goods or services. They are also easier for the government to collect, since they are paid at the point of sales. Now that I answered 4 questions, please leave me alone. See how nice it is to be out. That tutorial questions can wait. Finally, I see my favorite Dewan makan. Look at those choices. And here's what I eat. A huge chicken with some rebel and sauce. My favorite about this meal is this out of the quality chicken. Look at the steam and crispiness of it. It's so... This tutorial question won't leave me alone one day. Basically, if the government wants to improve healthcare, it can raise extra revenue in 2 ways. First, by increasing direct tax. This could mean raising income tax or corporate tax rates. The good thing about this is that it provides a steady and predictable source of income, especially from higher income groups and successful businesses. However, the downside is that higher taxes might reduce people's disposable income and discourage businesses from investing. The second one is by increasing indirect taxes. This includes raising SST or excise duties. The advantages is that it's easier to collect and can generate a lot more money quickly. But the disadvantages is that indirect taxes are regressive. They affect lower income households more because everyone pays the same rate, which can increase the cost of living. So whichever method the government chooses, it needs to find a balance between raising enough funds and avoiding too much burden on citizens. Now, while I'm at it, let's move on to the final part, the challenges that governments face when managing and collecting public revenue. The first major challenge is tax evasion and avoidance. Some people or companies hide their income or use legal loopholes to pay less tax. This reduces total revenues and creates unfairness because honest taxpayers end up paying more. To address this, governments needs a stronger enforcement, fewer loopholes, and better digital tax system. The second one is economic fluctuation. When the economy slows down, like during recession, business profit fall and unemployment rises. This means less tax revenues and more spending on welfare, which can lead to a budget deficit. That's why the government must have good fiscal planning and diversify its revenue sources to stay stable even during tough times. To sum up, public revenues is the backbone of government operations. It comes from taxes, fees, fines, and grants, all of which are essential to fund public services and support national growth. However, managing revenue isn't easy. The government must constantly balance fairness, efficiency, and economic stability to ensure it can continue serving the people effectively. Now that I have answered all the tutorial questions, I can finally rest. Thank you everyone for watching, and I'll see you next time. Bye!